Okay, how are all my face warriors doing today? Put on your war face. And before we get started, guys, you know, there's only about 4 days left to get these deals. Okay. Even if you just want to, you know, really be conservative, you could try the, 2 months for the price of one. Although this is your best value here. Go for a year. You know, I have a philosophy that a lot of people really don't give services, money managers, even mentors enough time to really prove whether or not they're going to add value to what you're trying to accomplish as a trader. I really think anything less than a quarter, which is still pretty short term, is really the minimum that you can make a decent judgment on whether you have something or not. And if you're experienced, you know in a day whether you have something or not, because you've been around and you've seen the whole spectrum from, garbage to things that could really, help you in the market, point your eye towards opportunities. So go ahead and click the button and get signed up. This is the once-a-year deal. I know we do other promos, but this is our best value deal, and it only happens once a year. Also, if you're not happy with your broker, or you'd like to also have another account going to, you really never know what you have until if you have a good racehorse, you don't know if it's a good racehorse until you run it against another one. You could set up another account, get a hold of the guys at Forest Park FX, and tell them about, what kind of size you do and what kind of spreads you're paying. And if you feel comfortable, obviously, the number one rule, as Justin said, is a return of capital. So be very careful if you're with one of these unregulated brokers, and if you are going to trade there because they accept you as a U.S. citizen, where most don't outside of the country, keep your balances pretty low. Yeah, windfalls, you pull it. Okay, so similar to what I'm hearing a lot of people in crypto doing. They don't sit with big balances on Binance or I don't know, what is it, MexBit or whatever. We have a great guest today. I met Vladi on Twitter, and you're going to want to stick around for it because he has a nice little ebook and has a method that he'll be presenting called the HFV method. I'm not sure if you're familiar with it. And looking forward to speaking to Vladi. It's my first interview I've had with him. So let me just touch upon a couple of things in the market. As I was saying with Paulie, here's one, here's two. If we push up here towards 1820 and I get some type of reversal candle after the Fed may attempt shorts here, and I'm with Paulie, and I do think that the dollar has some more weakness in it. I actually think that we're going to see a 119 handle, maybe even a 120 handle before this is over. But we could go to 118 and then pull back towards 116 before that happens. Just enough to shake out a lot of people. Although I was reading Jim Walsh last night, and I'll ask the guys, Jim is saying that the setup on COT is still showing way, 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 way too many dollar bulls. So that's another piece of evidence that says you should be looking for a lower dollar. Yesterday, Steve and I were talking about EG. We both didn't think it was a one-day wonder, and while we were talking, we were 38% back, and it popped pretty good off the 38% that was here, and we continue to pull back here. This is your daily. So I would just say, based upon this measurement, this is something I'm going to be interested if the Fed sets up the opportunity for me to buy it. Here's your range. Let's call it 89.35, 95. So 60 from 40 is going to give you right around 61.8 back around the 89 level. Between 89.20 and 89, I would probe it wrong over the low of the move. You also have the 50-day moving average coming in here around 89. So there's a couple of things. I think the daily must have been the 1 hour where you have a convergence of the two moving averages. I don't know where I saw it. Anyway, I still like it. I think last week was important, and you got a kind of an idea of how these fib levels, you got one good reaction off it, only lasted for a candle, but now it looks like maybe we're going to get A, B, C down here. So I'd be looking for something here. Also, I've been thinking about the gold quite a bit, and I'm wondering, you know, with the weak dollar, you know, what's taking it so long? I know we have some upside here today, 250. But you know, when I look at this daily here, this is not much of a, you know, it almost looks like there's distribution going on here. So I see two scenarios. Either we clean out this low here at 1180 and then turn up again. But, you know, my RSI work keeps me a little skeptical of the gold because of why. We have the confirm low here at the bottom. Okay, so markets generally don't give you tremendous rallies when price and momentum are confirming at the same level. So I may, you know, give it a shot on a break if we, you know, take it down here. But it almost looks like gold is still a short. We're not getting, we do have divergence in silver, but because we've had other lows, okay? This was the low in gold, which hasn't been taken out, whereas silver has taken out those lows. And as you can see, momentum is no longer confirming. So silver looks a little further along in the technical process, because if you look at the two, you have one not confirming new lows, and you have one that still has a confirmed low. So that's my take on a few of the markets that I'm paying attention to. And let me turn it over to Blake and see what he's thinking with a day away from the Fed. And
well,
how are you? How are you, buddy?
Hey, good. You know, you were mentioning how you were buying Netflix because of, you know, potential risk aversion. I bought Litecoin. I actually moved 95% of my portfolio into Litecoin. So
yeah, that's
just for safety.
Yeah,
just for safety.
It's amazing what people think is safe nowadays, isn't it?
That is.
Compared to you know, our earlier days.
Right. No, yeah. I got the joke. I think that one went over Paulie's head. He wasn't. I don't know if he really was thinking about what you were. You know, he doesn't get your humor sometimes. So yeah. I was getting it, but I let him finish up his thought. He is correct, though. I mean, stocks have been extremely resilient, and obviously, and yeah, to buy FANG for safety reasons, that's a head scratcher.
When I heard it, I had to, you know, did I really hear that? Yeah. Anyway, I knew you guys would think it was funny. But,
I did. I thought it was. I think you're a funny guy. So there's a interesting chart, and it was passed around like a few months ago, like sometime maybe beginning of sober, and I thought it was really interesting. Like the FANG stocks represent out of the S&P 500. The FANG stocks market cap is equivalent to the lower, like 2/3 of the S&P, something crazy like that. Like literally four or five companies. I think it was the original FANG, not all five, but it doesn't really matter, right? Like you take 4 or 5 stocks, and they're equivalent of 280. I think it was like 280 S&P stocks.
Yeah,
market cap wise,
concentrated.
Yeah, kinda. You think? Yeah. It's like orange juice on steroids. It's it's crazy. What's the most crazy thing about that is if those stocks do see some sort of decline, it will take the entire market down, and that's the scariest thing. So I'm buying Litecoin.
I like Litecoin too, because less calories.
And I'm buying Doggy Coin too. Doggy.
But you know, Blake, I was kind of thinking about. I read something about the corporate debt market, and you know, part of this bull market in equities has been financial engineering. Quite a bit of it, in fact. You know, these public corporations go into the debt market. Very generous, low rates, taking in money, but it's not like they're building new plants or anything. They're you know, paying out dividends. They're doing a lot of share buybacks. So I was kind of thinking, what would be the worst thing that could happen is actually, since they're buying back their shares with debt, they're buying their shares on margin. So it would almost exacerbate the whole situation if rates started going up and the asset that they used the borrowed money to buy started depreciating in value. It would be like a double whammy, and it you know, would be like that could really accelerate a decline, because they're basically, they margined all the money. Corporate debt has gone into their own stock.
It'll put a lot of these cash rich companies into a cash poor position, right? So I mean, it could be watch
that corporate debt market.
It's just it's definitely a slow moving train wreck, I think, and you gotta have ears up, and
could be a year away, could be 2 years.
It's not. You know, the fact of the matter is, right now everybody's chasing yield still. Every asset manager out there is trying to do it, because Trudeau's speaking, just FYI, he's speaking at Council on Foreign Relations event in New York.
There's a lot of action at the UN and stuff.
But one of the reasons why I'm watching that is just because I'm pretty long the dollar CAD right now. And I picked it up on Friday. This support, I think we might even still have the charts here from ForexAnalytix from on Friday. Let me go back, and I think the 4-hour chart, is still here from Friday, and the analysis from Friday I believe is still down there. But criticals, horizontal support, all the this is from the 20th September, so you can see all the analysis. Anyway, I've built a pretty big long position here in the Canadian. I sold a quarter of it here at 129.60 last night. I mean, we haven't done a whole lot overnight. We've been pretty much sitting here for the last 12 hours, whatever. But I really like the prospects of a higher dollar Canadian. I was just reading an article in Politico about probably the best thing for Canada to do is just not do anything, and just because remember, you got midterm elections coming up. In order for Trump to leave NAFTA, it's got to go in front of Congress, and if Congress, by the time it does that, it's going to be next. His second half of his term, and if Congress is controlled by Democrats, then it's probably going to get shot down. And so if Trudeau wants to just kind of wait it out, it might be the smartest case for Canada. There is also I think JP Morgan forecasts the dollar Canadian without NAFTA would trade at 145. Now, I think that's a far cry, and a lot would have to happen for NAFTA to completely, like the NAFTA agreement, to completely fall apart. You'd have to have Donald Trump moving away from NAFTA, trying to do a bilateral agreement with Mexico. Then it'd have to go through Congress and actually get approved. And that process, I mean, I think if Canada decided not to take the current NAFTA deal the way it is, the dollar Canadian could be trading back up at like 133, 135. But in order for it to really, plow higher towards, the 140 level, it would have to be a definitive, like, it ain't happening. and there's, you know, we're talking in, you know, sometime next year. So, but I am long the dollar Canadian for a lot of reasons, and I told you guys yesterday, and I'm not, you know, I'm you know, sticking to my plan here. And really, as long as the dollar Canadian remains over this 200-day moving average, which comes in around 128.60, I don't fear being long the dollar Canadian. It's, you know, holding above this, you know, multi-year trend line, broken trend line, and you know, I'm thinking that we can move back up to 131, 132 at minimum. Thank you. I think, and that's why the risk reward is here, and that, you know, and I can put together the story, like I can visualize the story on why I'm long. Now, I do want to talk about something really quick as far as the euro goes. I actually just shorted the euro at 89, sorry, 1789, and I closed it at 77. I just, you know, scalped it short for like 11 pips or 12 pips or whatever. I sold the spike. I covered it down here. And I'm short some euro yen from overnight. I actually shorted the euro yen at 66 overnight. Closed it at, on this. This is a 5-minute chart, so I actually closed it at 40 in Asian trade when I was watching Monday Night Football, which, by the way, was a great game. I don't know if you got a chance to watch it, Dale. It's a shootout, man. It was a shootout. Anyway, I closed it at 42. Half of it, and then I'm still in another half of my position. So I have enough euro short exposure, just being short the little euro yen I am. So I didn't want to be short euro dollar and euro yen at the same time. And by the way, I'm short euro yen. The reason why is because we have a 618 retracement here, 161% extension here. We haven't completed the flag pattern yet, but with this confluence, you can see the confluence right here, right here. With that confluence right there, this is the, you know, 618 of that move, 161% extension of this move. I don't mind being short where we're currently at. So, but stocks are stronger, and that's keeping it elevated for now. You know, stocks pull back, then the euro yen will probably pull back as well. And so I'm just staying short a little position in that. But going back to the euro dollar, I guess what I was going to say earlier is, and I haven't had a chance to confirm with my office. You know, I Skype into my office when I'm off of this webinar. So as soon as I get off this webinar, I, you know, pipe into my office in Greenwich, and then I chat with the guys in the office at Gellis Capital. So seeing some emails and conversations, and actually Twitter as well. They're not buying this euro strength. Now, you'd said, you know, the CFTC data still showed dollar longs, speculative longs in the market, you know, which is true. If you look at, but if you look really quick, and this is our chat room. Hey guys, you guys can all say hi. These are all the files people have uploaded. Last night I uploaded this daily sentiment index. The dollar index is actually, yesterday we registered 17, so it's very bearish sentiment in the dollar index, okay, which is, you know, we're getting towards extremes. You can see that I highlighted last night some of the, you know, crude, very extreme sentiment at 86. Yen is getting very extreme. That's why I don't know if dollar yen is going to make it much above 113, but the dollar index at 17, and yeah, you guys are on Jumbotron. Hey, Jumbotron. Okay, so that's all of us chit-chatting. There's 90.
What a great looking design.
Yeah, that we can thank Steve. See, and I can even say hello to Amanda, so I can reply and hey, Amanda. There you go. So, you know, and then I got a boatload of emojis. Like there's my muscular arm emoji. Anyway, sorry, I can get carried away with all that stuff. I'm gonna get rid of that. So what I was trying to point out here is, well, we're range bound in the euro dollar, and by the way, that community is only ForexAnalytix community, so you have to be a ForexAnalytix subscriber to be in there. Which that's where I'm at all day long. Paulie's there, Amanda's there, Steve, Stelios are there. Greg pops in every once in a while. Andre actually pops in every once in a blue moon. and Coach does once in a while. So the euro dollar is boxed in this range, and yesterday when we popped above this 118.10 level, I'm like, the risk is that we slump back to 117.20. Actually, if you read the analysis from yesterday, let's go to basic technical analysis, go to yesterday. Euro dollar back at the 79 level, follow hawkish comments from Draghi about pickup of inflation. This is the 161 extension again. Another day, another failure at the weekly. Oh, this, I guess we talked about it intraday. Another failure at the weekly 38% retracement at the 117.9 level, which is now becoming a big risk for the bulls, but a move back below 117.20 level would confirm topside failure. Obviously, we are just bouncing around, in it now. Yesterday, I was telling the people intraday, I'm like, okay, you can't be long up here now because of that failure. You can't be long. It's probably going to come right back down to 117.50. We came right back down to 117.50 and lower. Now, with the euro dollar, we're obviously boxed in, and I was gonna what I was gonna mention to you is I haven't talked to the guys in my office yet, but they seem that they're not very bullish. They're not very bullish the euro, and a lot of it is because all of Wall Street, all the analysts, and I can agree with that because I've read a lot of reports, even this morning, technical reports on everybody's expecting a stronger euro from here, and they are taking, I think, more of a contrarian view. And even though I'm not bearish the euro yet, not until or if we get below 117.20, we have to get below the bottom of this, basically this trend line here, which not going to happen until tomorrow, I don't think. But if we drop below that trend line, I will, without hesitation, short the euro dollar, because I know the entire market is bullish the euro. I know the market is. Everybody's pushing for a higher euro dollar, and I'm not a believer. Now, I'm not necessarily going to fade the euro. I did this morning, and by the way, we don't have any data coming out in 2 minutes, just to let you guys know. So I'm not in a hurry to finish talking. I'll let Steve and Stelios take over here in a couple of minutes, but I'm not necessarily fading the euro to stay short. I'm just playing this range. Like if we got down to 117.30, 117.40 today, I'd probably buy it. I don't, and when we were up here at 117.90, I shorted it at 89. I don't care about playing the intraday range, which I will do today, but going into tomorrow, post FOMC, I will not hesitate shorting it if it shows that type of reaction. If we see a move down here, I won't hesitate shorting it. At the same time, I don't mind buying it either. I think we can very easily get up to 118.50, and 118.50 is just the upper end of this this trading range here, which would be the 38% retracement on the dollar index too, just so you guys know. So I don't mind playing it to 118.50. I'd rather play it below 117.20. On the short side, but I'll have to let price action dictate that tomorrow. It's not a decision I'm going to make right at this moment in time, and it's not something that I can say with certainty to myself that I feel that the euro is going to break down or I feel it's going to break out to the upside. I really am. I'm pretty indifferent right now, and that's why I'm just kind of trading this range for now. And I think you have to be cognizant that this is your range. Selling it up here at 118 and buying it down at 117.20 seems like the logical trades at the moment. As if you're in the middle of the range, then you're just flipping a coin. It's a bit of a crapshoot. So, and until we, get in and out of there. Wait. Oi Toy says, I'm short the US dollar Canadian here. You're trading like a broken gate pick a side. You're making your listeners lose money. What are you talking about? Did you hear that? Did you hear that, Coach?
Yeah, I did. I did.
What are you talking about? No, you got to trade the range. It's a range. It's clearly a range, and so
I want my money back. I don't know what you're talking about.
He goes long, short, long, short. I'm long the dollar Canadian. I've been long the dollar Canadian since Friday, and doing well, by the way. And everybody actually that listened to this webinar on Friday knew that I was long the dollar Canadian. So, but intraday on the euro, you got to trade the range. Either that, or you can try to pick a side and think you can be smarter than the market, but the market's gonna.
Anyway, you can't please all the people all the time, and I dismissed him. So you know, in our room, there's respect for everybody, including our members, and that's our only rule. It's not a hard rule to follow, but we don't let our environment get polluted. So he's out of here.
Thanks, Dale. All right. Well, guys, I hope you. I'm going to actually go pipe into my office right now and go probably end up rearranging my sock drawer today because it might be one of those kind of days ahead of the FOMC.
Hey, Blake, one day I hope to be as lousy of a trader as you.
Yeah, I'm trying. I'm trying.
Yeah, I hope. Or Steve Volge or Greg Horvat or Amanda or anyway. The guy pissed me off. All right, so Stevie, how are you,
guys?
All right, good luck today, Blake.
Bye, Blake. See you later, mate. Bye. Hey, Dave.
Steve.
Are you feeling better today?
Yeah, I'm 50%. I'm halfway back, man. I'm at the 50% retrace level, but there was a confirmed high, so I'm looking for new highs here. So, how about yourself, buddy?
I'm good.
So, were you surprised that people were buying the FANGs as a flight to quality? A flight to safety is what I heard on CNBC. That's why they really said that, Steve. That people were buying FANG stocks that was a flight to safety yesterday.
Something tells me that we will be, recalling this day at some point in the not so distant future.
Yeah, I don't think they know about TED spreads and T-bills and things like that. But anyway, it's one of the most ridiculous things I've heard in a long time.
The market, the market is distorted in such an extent that a lot of people that have been in the market like for 10 years and haven't done the due diligence in at least studying, what preceded what they now understand and experience as a normal market, they've completely, lost the ability to judge, what makes sense, what doesn't make sense, because a lot of things make sense in the context of what's been happening during the past few years, but that doesn't mean that it's a little bit of a matrix world kind of like the movie. It's you are in an alternate reality. Some things are happening the way they're happening, but history has taught us over and over again that this is not going to go forever, for sure. And some people just believe it's going to go on forever.
Well, maybe they're not just buying cannabis stocks. Anyway, it's great to hear you. I think Stell's with you too, so I'm just going to. Hi, Stell. How are you, buddy?
Why don't you start by telling us if there is anything on the macro perspective that makes sense to talk about?
No, you can carry on now. Seriously, there's been no real developments. I mean, apparently it looks like the Italian budget. There's been some kind of positive rumors, let's say, about the Italian budget, which is due to be finalized by Thursday. But nothing's happened since yesterday, and I think the whole market's going to be.
He's waiting for tomorrow.
For the Fed, yeah, and like we said yesterday, the Fed's going to deliver, but what are they going to do afterwards? We're pricing one more for this year and three more, I think, roughly. I need to look at Fed fund futures again, but roughly three more next year. which is kind of fair given, you know, the U.S. growth, inflation. But I've said this before, because of all these trade wars and potentially things that might happen in the next, you know, 6 months, you know, year, who knows? I think the risk is for the Fed to underdeliver, because what's the other alternative? That they hike 4 times next year? Yeah, it's possible, sorry, but it's a very small part of the possible scenarios, you know, and I don't like betting on things that I think are a very low probability. So
first of all, I think that the basic reason for which I believe that the Fed can disappoint in the dovish side, and you know, I'm going to just, you know, mention that, and then we can go to you know, analyzing the markets. Although I have to admit, not much has happened since yesterday. I mean, today I just had to adjust very few key levels, and that says a lot. Is the fact that still the Fed has now, in essence, guided forward, letting us know more or less that normal rates for today, I mean, for today's standards in general, have to be considered anything between 3.5%, right? So that's what we think. Yeah. Yes. So we're currently at 2%, and the market is pricing in another 1% of hikes, let's say, during the next 15 months, which would take us to the bottom of this range, which they now consider like, you know, normalized rates. So, you know, given that, and assuming that there is not going to be an accident in the market by then, as you very well said, best case scenario, by the end of next year, we're going to be at the bottom of what they consider to be neutral rates, right? I'm not going to go in the discussion of it makes no sense that neutral rates are 3% and that shows how weak the economy is, etc., etc. We've had that conversation in the past, and I think that everybody understands that this is a totally different topic. But you know, the signs are definitely there that, you know, what we consider today a strong economy is not the same that what in comparison to what we considered in the 90s or in the 80s or in the 60s is a strong economy. But regardless, so let's say everything goes as planned and we're at 3%. The absolutely only way that they can surprise on the hawky side is, let's say, a scenario in which inflation goes out of hand, right? But even if that happens, do you believe that with the US debt being as high as it is, and the cost of servicing the debt increasing that much by even 0.25% of increase in the rates, do you really believe that the Fed would actually try to help the economy or fight inflation? Because personally, you know, I've said that before, I very much doubted that they would actually try to fight inflation. I believe that they would be mostly focused in helping the economy not break down in such an event. So, you know, that's my way of thinking, and that's why I also believe that, you know, if there is even without an accident, as I said, in the financial markets, which in my opinion is a high probability scenario if we're talking about the next 12 months, or 15 months. But even if that doesn't happen, as you said, best case scenario, they're going to give us exactly what the market is pricing in, but a lot of possibilities that something is going to happen and we're going to get less than that. In which case, obviously, the risks are tilted to the downside for the dollar.
Yeah. I agree with you. And, you know, although the Fed's and most central banks' mandate is to control inflation, you can see when, especially with the Fed, when the stock market takes a nosedive, which it has, you know, 2 or 3 times the last couple of years, they're all out on the wire straight away, right? You notice that. So it shows you that
we're here.
Yeah, it shows you how important they consider equities to be, you know, and the stock markets. And, you know, Donald Trump has also basically aligned himself with the indices, right? Every time they go up, he's talking about how great it is that they're all all-time highs. What's going to happen when they start dropping, you know?
Yeah, they obviously strongly believe that, you know, what's a big part of what's keeping this market going is the wealth effect. And if for some reason, you know, this gets reversed, then the unraveling is going to be like extremely fast and extremely vicious. So that's why every time, as you said, the market seems to be at risk, indirectly or directly, explicitly or implicitly, they all make sure that the market understands, don't worry, we're here, we will help if needed. But this will keep working until it stops working, and when it stops working, things are not going to be easy, because I really have no idea what can support that market afterwards. Speaking of which, we can start with by having a look at the indices, since we're talking about that. The S&P is still trading. Yesterday, actually, it at the lows of the day tested this previous high that we had in the end of August. It held so far. As I was mentioning yesterday, I'm still short half a position. As I was mentioning yesterday, to be honest, I have no indication that this is anything else than a corrective move lower. I mean, I don't see any real momentum. I might actually book, those few handles of profit I have, because, unless we keep on moving lower today, because I really don't see the market being ready to roll over yet. Now, Nasdaq obviously remains somewhat weaker than the rest of the markets, but that doesn't change the fact that we're not that far away from the all-time high here as well. Dow Jones, the only thing I want to stress out here is, under normal circumstances, the fact that we actually, the day before yesterday, we actually pushed through the all-time high, and we closed actually at an all-time high. And today, and yesterday, we actually reversed that, and we came back below, the previous high, and actually marked an evening star formation on the daily chart. Under normal circumstances, that would be quite a strong reversal signal. But given how the stock markets have been, I would want a lot more confirmation than that. Regardless, quite a nasty reversal after. Obviously getting some people trapped on the long side there. I would want to see some. Can say more about that. Now, having to do with the DAX actually stalled now. It's the third day that we're stalling in that area of resistance. I also wrote that during the weekend. That doesn't mean that we cannot punch through that area of resistance, but that means that at least we know that this area is still working as a support resistance area. To be honest, unless we see some move lower, this is going to be looking a lot more like a short-term consolidation, in which case I'm going to be looking, once we bridge above that, I'm going to be looking towards 12,600. 12,677 is a 61.8, so anywhere between there. The 200 DMA is also a little bit above 12,600. I think that's the next natural area of resistance. So if we actually close above 12,400, I think our next target is there. But the DAX needs to do more to prove that it's actually resuming to the upside. Until then, it's more or less of a chop fest. The FTSE is actually trying to bridge to that equivalent level today, that previous here. So I'm monitoring this level. If we actually close above it, the chances of more bullish price action increase. And for me, this descending trend line resistance here is key for the trend. If we actually manage to break above it, I do think that the FTSE is going to extend quite a lot higher. Until that happens, we can't be certain that this move lower is complete. So far, the recovery has been quite sharp, though, and this is something I'm taking into account. I bet it trapped a lot of people being short here or keeping the short positions, because, as I said, I was also fooled here. This price action that we had several days of consolidation and indecision candles like spinning tops and dojis. This clearly pointed to some kind of a consolidation that's going to break in the direction of the previous move, which was lower. So I expected the move lower, and then we got an acceleration higher, and this looks more like a V-shaped recovery now. So I want to see what's going to happen from this level, the 7.5 thousand area. I think it's quite an important support resistance area. So if we clear above it, the chances that the move lower is done increase substantially. Next area of resistance, by the way, is at 7,600. So that has to do with my view on the FTSE. Not much has changed. Oh, Stelio, I remember I sent you that chart as well on Skype because I know that your friend was asking here, and I showed it. As you see, the Shanghai Composite Index actually, did make the big move above this descending wedge, and that's quite a bullish development. We're currently testing an area in which we got rejected a couple of times previously. I think that this is actually actually I wasn't paying attention to that. I was looking at the FXI, but then Stelios told me that a friend of his is monitoring the Shanghai Composite Index, and we were down here. So I then had a look at it, and they said, listen, it's currently on very, very strong area of support. Let me zoom out so you can see it. There it is. As you see, this has been a very important area of support. Yeah, so I said that, listen, the only bullish thing about this is the potential of actually finding a bottom here and playing out a descending wedge potential. As you see, there was also, you could call that a 3-drive, coach, right?
Yeah, or an ending diagonal, maybe, if you're an Elliott.
Yeah, just look at this RSI divergence. I mean, the first RSI reading down here was a lot in very oversold territory. It was even below 20, roughly at 18, 19. Then we got the next low, which the momentum was obviously already stalling, and the next RSI low was above 30, and the next one was even higher than that. So it started looking like it started looking like a great proposition here. And we got the breakout, we got 1 day of consolidation. I like the fact that then we saw a very, very big candle higher. And no wonder we're seeing a little bit of a consolidation now, after a huge candle. But I do think that if we clear this 2.8 K area of resistance, I think that the next target is definitely the high of the wedge here, which is above 2,900. So bottom line, I think that Chinese stocks seem to be rebounding in a healthy manner. And exactly as copper, it fooled people because it looked like both of them would break down at that night that Trump actually announced, the extension of tariffs. And instead of actually breaking down, which was the common sense of what would happen, they did the exact opposite. They broke out from the equivalent formations. And I bet they got a lot of people scratching their heads. And usually when you start a move by people being, really troubled and wrong-footed, usually this is a good recipe to see a much larger move than you initially expected. So, I have to admit that this looks interesting and, has more upside potential, I believe. So let's have a look at the FXI as well, since we're speaking about that. FXI definitely not as clean, of a move as the Shanghai Composite Index. I mean, this is the China large cap ETF. As you see, this looks more like an expanding triangle. So I don't think that, I mean, we did have RSI divergence. That thing was clear, and we almost made it to the ideal target, which was down at 39.53. We actually made it to 39, roughly 83. So very, very close to the target. And we've seen a decent recovery, but is it out of the woods yet? Has it really turned bullish from a technical perspective? No, not yet actually. So I think the Shanghai Composite is a much better proxy to play some risk on in China if that's what you're looking to do. Now, let's return back to our Forex. I don't think that Blake mentioned it, so I'm gonna mention it today briefly, because yesterday he talked about them, so I didn't want to go over them again. But let me say that it's quite important that the Aussie actually got rejected from this confluence of resistances here, and as long as it fails to clear above this area, I can't possibly advocate that somebody should be long. So it's quite clear, in my opinion, 73 to 73.30 is the key area. I think that if we make it above that, we can easily extend to the 75-cent area. But unless we do that, respect the possibility of more downside. Okay, and more or less the same deal applies with the Kiwi. Kiwi found support at a very nice confluence of supports. I mean, more than 3 supports were actually gathered in a very, very tight area of 20-30 pips. We got a nice rebound from there, but unless we clear this 67.20 area to the upside, I find no reason of actually trying to be long, especially near resistance. So I'm not saying that it can't do that. Actually, I think that sooner or later both of those pairs should see like a bigger rebound, because the downside momentum has clearly been stalling for some time now, and this is something that you can easily notice just by having a fast look at the daily chart. But that doesn't mean that it's going to happen right here, right now, right? So 67.20 is the area we need to clear. If we do that, I believe that 68.70 is going to be printing quite fast after that. I do believe that a lot of stop losses have to be above this level, and I do believe a lot of people are going to be monitoring this area. People that have been short are going to be saying, once we rebound over that, okay, I've had a good run, but probably there's a bigger rebound happening here, so it's time for me to collect some profits. Other people are going to be getting stopped in short positions that they were late in the game. So those are enough to fuel some more upside after we clear that area. So I really I would really advise somebody not to be short once we clear that area. There should be at least some decent follow through. Now, having to do with the Aussie Kiwi, I have to say that this is quite an important barometer for me, because there are a lot of pairs that you might want to trade. Like you might want to trade some of the Euro crosses, like Euro Aussie, Euro Kiwi, some pound crosses like pound Aussie, pound Kiwi, Aussie yen, Kiwi yen, Aussie USD, Kiwi USD. So the question always is, okay, if you want to be long, which is the better one to be long? If you want to be short, which is the better one to be short? And obviously Aussie Kiwi is going to tell us. He's going to give us the answer for that. And, I do see the potential that there is more downside coming here. I saw quite a strong move lower, and this looks like a consolidation, but we're still struggling and holding more or less this ascending channel. So I have to say that as long as we're holding, I have to remain neutral. But if we do clear this trend line cleanly, and especially if we do clear above the 1084 area, then I would definitely be looking for a period that the Kiwi is going to be overperforming the Aussie. And, I have to take that into account for, as I said, for selecting, which of the two instruments I want to choose to be long or short against other currencies. I very rarely, and it's been a long time, trade, the Aussie Kiwi itself, because I hate the fact that, it can spend big periods of time doing nothing. But as I said, I always look at it to know what I'm going to do with the others. Now, having to do with metals, gold, nothing to add here. Still consolidating. I still believe there is potential for more upside before resuming lower, but it has to prove that it can actually do that. Silver, only if we clear this 1430, 1440 area, there's something to talk about. Until that happens, there's really nothing to talk about. Palladium, I do see the first signs that actually palladium is losing upside momentum. It makes sense. I mean, the daily RSI is now above 90. And if I go down to the 4-hour chart, you're going to see that, perhaps we're also trying to form here some kind of an ascending wedge, right? So perhaps there's a little bit more upside left, but I would be looking for a pullback afterwards. I do think that a pullback should be considered, a buying opportunity. First area of support, I think, should be considered that previous high there at 1,027, let's call it. And in my opinion, a retest of the 1,000 area is going to be more or less, a gift. I don't know if it can make it back to that level, but it's going to be a great level to be buying the metal. I think that the move higher is more or less impulsive, and the corrective move lower, if you zoom out and look at the big picture, does look corrective in nature as well. So I think being long is a much, much better proposition than being short. Now let's have a look at a few of the Coach, do we have an interview today, by the way?
Yes, Steve.
Who do we have today?
Vladimir Mikiratumov.
Okay. Vladimir Putin, I said.
To me, I'm going to be calling him Vladdy, because that's what he has on his Twitter handle. But I'm looking forward to it. It's going to be, every once in a while, and I've learned this on Twitter, that it's not the most followed or famous guys that are always the best traders out there. There are many people that, have less than 1,000 followers that don't need followers because they're successful traders. So,
first of all, everybody began by having 0 followers anyhow, right? There is no magic way. I mean, unless you're like, somebody extremely famous already. So the moment you join Twitter, there's going to be a huge following coming your way. Everybody else, needs to take some time to prove their worth and gain followers, the slow way. So, that doesn't say much, as you said. I agree with you.
Yeah, I mean, in Chicago, I had followers, but they were usually people trying to, roll me and take my wallet. So anyway, they saw maybe I had a little too much to drink. I'd be an easy target. But yeah, looking forward to talking to Vladdy, and anytime you're ready to wrap, just let me know.
Absolutely. I'm going to have a look at the euro yen and the pound yen, which we didn't see yesterday, and then it's all yours. So euro yen seems to be, or at least attempting for a third consecutive day to clear the 61.8. I'm not 100% sure it's going to do. I mean, it looked like it would do that, yesterday and the day before yesterday. Both of those days, it actually failed and ended up closing below. So let's, first wait and see a daily close above it. But if that happens, I would be looking, as you see, I already have a target of 133.80. Why? That's a quality target of the first leg higher, with the second leg higher after this pennant took place. So, that's the area I would be looking for. If you remember, we drew that a long time ago when we were here. I said that, listen, this looks like there should be a little bit more weakness coming and one more leg higher, at least, that, could get us back to the 131.50 area, or even the 61.8 at 132.60. So to be honest, if we clear this area, it's already going to be more of a recovery than I initially expected. But, as I said, 133.80 is the next target I would be looking for. And, I would really not want to see the pair higher. If I do, I'm going to be a lot more neutral than I am, because I still maintain, a soft bearish thesis. But as I said, it's a soft one. I mean, I'm not like that much convinced about it. But if I had to have an opinion, it would be that it can still fail and resume lower. More or less the same deal here with the pound yen. Pound yen had a massive reversal day on Friday. I mean, this was a key reversal, and those are, very, very strong bearish candles. I mean, they have a high probability of actually pointing to a reversal accurately. So, we're still within that candle. We're recovering within that candle. Especially for the pound yen, I would have to respect the possibility of more downside unless we clear the upside, that daily close that we had on Thursday, that 149.20. So, pound yen looks even better to me to the downside. You can see here why as well. If I zoom out, we broke below quite a big corrective, in my opinion, pattern. So, my thesis is bearish as long as we stay below this broken trend line support. We've already tested it a couple of times as a resistance, and the pair failed. So, let's see what happens from here. I don't want to see higher prices than the high that we had on Thursday, or at the very least the high that we had on Friday before we got that key reversal. So thank you very much, Dale.
You're welcome, Steve.
Enjoy the interview. We'll be back here tomorrow.
Okay. Okay. Good hunting, and you guys can catch Steve in the members chat with Blake, and I'm sure that Stella will be back, and I may drop in today. Anyway, I'd like to move ahead. Vlad, how are you, buddy? I'm really looking forward to this interview, getting to meet you and talk to you about our passion, which is the market. So I just passed you the controls, just waiting to see your screen. There's a screen share option and hear your voice.
Okay. Dale, can you hear me?
Can hear you loud and clear, Vladdy. How are you today, buddy?
Amazing, amazing. Great. I've actually been looking forward for this. It's my first interview, and I just find it as, I use Twitter to pretty much document my journey, and it's sort of my outsource, and that's how you found me.
Yeah.
And so I just, I'm new to the trading space relatively.
Okay.
So I'm just using Twitter to connect with other people who are also interested in trading.
It's a great tool, and like I said, I love to lift people up that don't have 50,000 followers, and I went to your website, and I was wondering how you came up with your handle at Be Independent BB, and I had to go to your website to find out that what you mean by BB is bit by bit, and you know what, that is solid survival advice for people coming into the business. Let me ask you this though. Did you learn to go bit by biting off more than you could chew, like a lot of people?
Actually, my history with risk management goes a bit of a longer way. I played poker for a long time, and there I got burned a lot. So the concept of risk management was not new to me in any way, because I've already experienced it in poker.
Okay. I mean, everything's a bet. There are a lot of analogies with poker players. A lot of good poker players also are very good traders. Have you noticed that? Because that one reason?
That's definitely risk management. Risk management is, I would say, one of the main reasons.
Okay, so how long? Tell us what you were doing before you got. Well, were you playing poker to support yourself, or did you have another profession before you got into trading?
So I'm an aerospace student. I'm a bachelor. I'm going to finish my bachelor course. And the way I got into this initially was that last year I had a pretty easy semester, and I just wanted to make my time useful. And so I heard about this crypto saying, reading headlines like Bitcoin at 3,000, Bitcoin at 4,000, and I was like, damn, this is just not stopping. But obviously, I knew that getting into a space like that is not easy. Like everyone wants to win, right? So then it becomes competitive. So you just can't be naive and just go in, this is going to be easy, I'm going to win right away. So that was my mindset. And for about 4 months, I just I read what Bitcoin was, the concept, got behind it, obviously, if I'm still in this.
Okay.
Yeah, and then I looked at charts. That was my I had 4 months where I just played with charts, played with the Fibonacci tool. It's still one of my best tools to date. It's one of my favorite ones.
Okay, because I don't see any fibs on your chart. I was going to ask you,
No.
in the technical world, was there anyone or a mentor or somebody that was a positive influence on you picking up these skills to be able to recognize patterns and entries, exits, how to measure objectives, etc.? Did you have a mentor?
Yeah, for sure. I still sort of do. Although I do this on my own mostly.
Yes.
But I did. It was the market sniper, Francis Hunt. I'm not sure if you've heard of him.
Okay. I know that Twitter handle, Market Sniper. I think isn't he from Australia? Is that correct too?
I believe he's from South Africa.
Oh, okay.
So that's where he was born.
Okay.
But
so what did you learn from him that you're still using in your work today?
His methods, all these lines you see, actually. And
okay. So is the HFV method you learned from him?
HVF, yeah, correct. Yeah, that's.
Oh, okay. I'm dyslexic. I wrote HFV, but it's HVF. Right? Okay.
HVF, yeah. I think it stands for Hunt Volatility Funnel. Yeah, that's exactly. Yeah.
Okay. All right. So, and crypto is all you trade.
It's my main one. However, because I'm not a range trader, I'm a breakout trader, and we mostly trade continuation patterns.
Okay.
Crypto has been quite sideways, so I would say range traders have been doing a living off these past few months, but it's just been dull for myself.
Okay. Until Ripple came out of the hole.
I didn't catch the Ripple move, unfortunately.
Maybe it just started, and this is a pullback to buy. Is that what you're thinking?
Not really. I would actually would like to. I mean, we can zoom in the chart. Let's do it.
Okay.
Actually, I have here a better example to demonstrate what the HVF method looks like.
Okay.
Or upside on the Euro ruble. So perhaps going back to something more home to you. Yeah.
Are you originally? Well, I never really traded the ruble. Are you originally from Russia?
Yeah, correct. Yeah, I was born there.
But you live in California now?
I live in the Netherlands.
Okay, that's right. Because you have a complete American type accent. There's no Russian accent.
I've had my international experiences through life, and my studies in English as well. So I'm quite comfortable.
All right. So even when you choose a currency instrument, you choose a pretty volatile one. So, because we know the ruble has some huge moves. Nothing like the Turkish lira had, but definitely one of the emerging market currencies that was having some problems for a while. So, go ahead. I see the different colored lines. Is that part of the method? Okay.
That's all part of it. So I think, the best way to teach is by example, right? So we're just going to remove everything that we see here.
Okay.
Pardon. Okay. Yeah, we got it. So pretty much what we're looking for in the chart initially is a reduction in volatility. So some people would just look at this and say, okay, if I draw something like this, right? There's sort of some symmetrical triangle in there. Potentially, obviously it's debatable, but that's sort of the volatility squeeze into in there. I think we can agree on that.
Yes.
So in the HVF method, what you're looking for is 3 alternating highs and lows. And the thing is that we have things that make our second high and our third high points valid. So the way we would look at this, so this is clearly an uptrend. And then we have our first exhaustive high here.
Okay.
And then this is the first sell-off low, quite strong, right?
Right.
And then in order to have a valid second high point, you're looking for the second impulse to be between the 0.5 and the 0.886. So that makes it, that's what it's called, what makes a valid second high point. So
the second high point is a lower high, always?
Correct. Correct. Yeah. So there's definitely a squeeze in there. You're looking for a squeeze.
Got it.
So then we can start, and obviously then your second low point needs to be higher than your first low point.
Okay.
So then, having that in mind, we can already draw.
So now you're looking for your third exhaustive high.
Correct. So for that, we use the flip tool again, and
let me ask you this: do you know why the sniper chose the number 3 to have 3, points of highs and lows for the method? Because I mean, I'm big on the number 3. It's a number of completion. I do a lot of 3 drive work, etc.
Mm-hmm.
So, do you know why he selected 3? Is it because it's a powerful number?
I'm not sure. I guess that makes some sense. The thing is, sometimes you get a squeeze within a squeeze. We can see that. We're gonna see that on the Ethereum chart.
Oh, we're like on the third one, you'll have a fractal.
Correct.
There'll be 3 within the third.
Yeah. You see that?
Okay.
It still amazes me sometimes to this day.
Yeah.
And obviously, you need to be in front of the chart to catch that point precisely.
Right.
But sometimes, so that's why sniper. That's why he calls himself the market sniper, which is that exact moment where that the bigger risk reward is provided by the market. So in the HVF method, what you're actually looking at is to maximize your risk reward ratio.
Okay. All right. Interesting. All right. So in this example, you're waiting for the third high, and then you'd be waiting for the third low before you would take action. So what would be the trigger if we could just imagine having another higher low here?
Mm-hmm. So the thing is, usually a valid third high is above the 0.5 fib, but you can also have these. It's called like an early entry at if you see a lot of confluence with the 382 fib, which is actually something that you see here. And if you actually use it as a resistance line, you can actually see the squeeze sort of going on here as well as an ascending triangle potentially, right? So there's some bullish bias. You could say that there's some bullish bias to it.
Right.
I'm not sure if you agree, but at least in my mind.
Yeah, higher lows, higher highs.
Correct, yeah. So then, in this case, this would become, our third high. I like to mark it as green because this is where your stop buy order will be located. This is where you leave your pending order at that level. And then, if the computer allows me to.
So you're going to be stopping yourself into longs or getting short and stopping yourself out of shorts above that green line.
So this is my entry point above that green line.
All right, you're buying a breakout. You're buying a breakout.
Yeah.
Okay.
Yeah.
All right.
So that's what the HVF method is about. It's mostly about trading breakouts, and that's what I said. That's why I said that I haven't been actually trading a lot of cryptos because there's a lot of range trading involved, and I'm just not comfortable.
What about money management after a breakout? Do you believe in taking partial profits to take something off the table and get paid? And when would you move your stop to say break even or profit? How do you do that in your trading personally?
I actually don't do that personally. I know people that they aren't comfortable with just getting. We're gonna get to this point, but so the market gets along. I don't know. Let's say to the top, right? Somewhere here.
So you have the patience to ride sit with trades until targets.
Yeah, because I trust the method.
You know that's a great quality to have because most don't. So congratulations on that, to have the patience to do it. Most people start seeing the money fly, up, down. They want to capture something. I'm actually a proponent of taking something off the table and keeping something on for targets, because sometimes you have more than one entry where you could take, you took something off the table and then you believe in the trade and you get another entry, then your risk is profits rather than principal. So just money management stuff.
Yeah,
but whatever, you know, if it's working, whatever is working for you, don't fix it, buddy.
I'm just, you know, I'm new to the markets, Dale. So like, although I've spent a lot of time on the chart, I'm, especially now that I'm very familiar with the method, with the HUF method, I'm actually maybe looking to broaden my knowledge, because there's a lot of it out there, right? There's just not time for everything.
There's a thousand ways to skin a cat, buddy.
Yeah,
So,
exactly.
so what do you usually have on your watch list? You know, I've told people that, you know, sometimes people that are new try to cover too many instruments, and someone once told me, if you can't remember the last price of what you trade, you're trading too many things. What do you think?
That's actually that's a fair point. I do trade a lot of I follow a lot of instruments. We can go into my watch list. So there's a bit of everything. There's a bit of crypto, and I've recently, because of the crypto sideways, I'm also following stocks, and I'm also following Forex, like we've just covered. So yeah, that I would get behind that. Perhaps there's a lot out there, but the thing is, I don't see the perfect pattern very often. So the idea behind watching a lot of charts is just to have, you know, to it's just a game of numbers, right? To get the perfect pattern you're looking for. So
yeah, exactly.
I guess that's what I'm looking at.
It's a great reason. Let me ask you this: I interviewed a gentleman the other day, and before the move in Ripple happened, he said he saw a fresh fiat coming out of Korea and Japan. So, do you follow any kind of like money flow things in crypto?
No. I only trust the chart. Maybe I should get some data behind me, but the chart is what I follow. I trust the chart. If it's telling me that it's likely to go up or down, like we see on Ethereum, actually,
and is a 4-hour time frame your preferred time frame for trading?
Yeah, you know, it's really good. It's somewhere between two, because I see a lot of patterns failing on low time frames, and then obviously as you zoom out, the idea is it's like an aging wine, right? So the longer it takes you, let's go back to the euro ruble, for example. So this is from 2015. So my confidence, exactly. So my confidence that this is actually going to reach target, which by the way we didn't cover, but it's from the geometry of the pattern itself. Then you project it from the midway line, which is exactly in the middle between your. So this is our entry point, right?
Right.
And this is our stop loss. And then, like you saw, the take profit is actually already in the geometry of the pattern itself, and that's your take profit level.
Is that like a harmonic pattern? The geometry? Would you consider it harmonic?
I don't know. There's just like I said, I played around with the Fibonacci tool, and I was just amazed by how often the price respected those levels. And there's something in the geometry of the already existing pattern that could potentially, you know.
The creator was a mathematician.
Yeah, for sure.
Everything has laws of nature that things you wouldn't think would respect it do. So great discovery too. So you know what? For someone who hasn't been doing this that long, I notice you have a community on your website. So do you have do you believe in masterminding with other traders, and because we only have two eyes?
Oh yeah, for sure, for sure. Although I do put a lot of work in because I'm the creator of the group.
Okay.
So in the beginning, I actually have a free private group where we share all the setups we see. So if anyone is willing, like, you can just DM me on Twitter. I do like a bit of a process to see if the person fits or not. I just don't want to let everyone in.
Yeah, you vet them.
Yeah, exactly. Although it's free, it doesn't mean that it's anyone that can enter or can do it. There has to be some trust between us, and that.
So
that
do you do everything for free? I also noticed that you have ebooks on this course. Now would probably
correct.
be a pretty good time to go to your website, Vladi, and show people where they could find you and what you offer. God,
Sure.
I hate that word noob. I hate that word newbie.
Fair enough. Yeah. I've had that.
You know, newbie, new. Oh, newbie. You know,
Actually, yeah.
it should be doobie do. But anyway, how about aspiring trader? You know, I don't know. I think newbie's demeaning, but that's just me. I'm a
The thing is, where I started with this website, I was full on crypto.
Yeah.
And my idea was the thing is, because crypto is a new space, a lot of people focus, at least that's what I see, a lot of people focus on the fundamental analysis. So they don't actually know how to look at a chart. And so my idea was to just completely, like, that's wrong in my opinion. Because first of all, most of the people in the space are first-time investors, so they don't quite know what they're doing, right, initially. And I don't know, I just completely digressed from that idea. And
well, Vladi, I've interviewed well over 1,000 traders in the last several years, and the average answer for how long it takes a trader to make a breakthrough, to be consistent and pull money out of the market, to be able to quote unquote trade for a living, is about 4 years. So it's just something to keep in mind. I'm sure people do it quicker, but I'd like to ask you, how do you tell people to do it bit by bit? A lot of people go out and they're live trading with too much leverage right away. In crypto, is there a way for people to trade very, very, very minimal size or a demo account to see, before they go live and put big money on the line for them do you think they should do that for a while, trade a demo, keep a journal? Do you keep a journal?
Yeah, for sure. Definitely keep a journal, especially in the beginning. Like, I haven't done it as often as I should. I do have that, but in the beginning, yeah.
For your next interview, I want you to bring a note from your mom that you've been a little lax, slacking on your journal. But anyway, so go ahead, just give us a rundown of your website and everything's free. You're saying everything's free, the course, being part of the community, and your mentoring.
Yeah, let's guide you through it. So the newbie part is actually not related to trading. It's actually for people that they've heard of cryptocurrency, but they're not sure of what it is about. And when I did this, it was November, December, so the hype was still around. And that was exactly what I did. I wanted people to think about the space. So this is literally my first sentence. Like, look, this is not going to be as easy as people make it sound. And so what is it about? How does it work? I go over Bitcoin, Ethereum, and Ripple. This is the different concepts, ask some pertinent questions. Also put in how you can make your crypto safe, of course, because everything's online, and there should be some thought put into it as well.
So you could guide me when I want to buy some crypto with a wallet that's not made out of leather.
Yeah, sure, I can do that.
All right, buddy. Thank you.
Yeah, sure.
I'm an old guy, I mean,
I mean, if
Vladi, on my desk, I have one of those ticker tapes under glass, and that's what I trade with. Do you remember those? I know you weren't around, but you remember seeing him in a movie?
Yeah, yeah.
But like a ticker tape under glass? Okay, I'm just kidding.
Can I
But
just Google that?
yeah, go ahead. Yeah, I think everyone should be a tape reader. So, okay. So
Yeah, let's just wait. But then I have also the trading part. So if you've never looked at the chart before, literally, and the reason why I do this is because the crypto community gave me everything. So I gathered a lot of knowledge from different people, and everything was for free because the idea behind crypto is that everything's open source. Like the Bitcoin code, a random person could come in. Obviously, as long as your idea is good and you're confident in what you're doing, you should rise. People eventually will see that you're good, and you could actually, participate in Bitcoin code. And that's the idea. The code is open. Have you heard of GitHub?
Of what?
GitHub.
No.
So it's pretty much a platform for developers, and where the code is actually shared, and that's where you can find the Bitcoin code. You can just go out there and look for yourself. Obviously, probably you won't understand much of it, but it's open for everyone.
Yeah, this is like the democratization of everything, especially money. Is that a decent definition of what it is, this new paradigm?
I don't know, because I've been more behind Bitcoin, the concept, than obviously, because when you enter it, it's a new paradigm. This is gonna revolutionize the world. We're gonna, whatever. Screw the banks, we the people own the money.
It becomes a lifestyle, doesn't it?
Yeah, some people, yeah. Not in my case, not in my particular case, but there's definitely that people that, it's just, in the beginning, there's a lot of knowledge that gets, at least in my personal view, you have to ask yourself a lot of questions. For example, how is money made, And most people actually don't know where money comes from, and you use it every day. So that initially, just for itself, is, it's a big problem, in my opinion. Maybe not a problem, but I would like more people to know about it, how it's actually created, for example.
Okay. So you're paying it forward is basically what you're saying, and that's why everything's free.
Yeah. Because everything I know was brought in to me for free.
Okay.
So
All right. So your community, what do you have? A chat room? How do you and your community communicate? And is it during market hours and etc.?
So we have. So if you want to join the group, just go to my Twitter and handle and send me a message. That's the easiest way to reach me generally.
Okay.
And actually, in the beginning, to find the people that traded with the HVF method, what I did was checking charts on TradingView that had the name HVF. So what I did was reach out to every one of those individuals that had put out charts with the HVF handle on it, and I just told them, if you want to join, like the goal is to create a community with it. So all that process was done through Twitter, and the platform we use is WhatsApp.
Okay.
It's just.
Can I see what that looks like? What's up?
Sure. If you give me a sec.
Is it just you just text to each other and show screenshots, or can you talk to people too? Is there an audio function?
Yeah, there's an audio version too.
Okay.
Give me a sec.
I know most of you guys from your generation don't like to talk. You mainly like to text. Am I right?
Yeah. Although talking is also nice when you're, for example, driving, or for me, I live in the Netherlands, so I drive the bike when I'm driving on my bike, and rather than texting, that's quite challenging. So this is a bit of private stuff, but whatever. So this is my WhatsApp, and literally what I have is 6 people on here. I've posted the status for the week, like you can see here. falling tri, GBP, DKK. So exotics, pretty much. That's where the volatility is at, right?
Okay. Yeah.
And where it sort of runs cleaner, I would say, runs. That's why crypto is great to trade, because it's so emotional, right?
Yeah.
I feel like there's a lot of people that there are like we said, they're new to the space. So
well, let me tell you something. Let me make a forecast. You're young. You're in tune. You're taking all the right steps. You have a tremendous future in the trading business ahead of you, and I'll be rooting for you and want to thank you so much for taking some time out of your day to tell your story and become a resource for people interested in your methodology and what you do.
Thank you very much, Dale. I mean, like I said, just everything's free. You can go to the website. The way it's done behind the scenes is through an email list. Then I send you the document. You read it. You find out about the method. Maybe try it on the chart for yourself. And yeah, I'm more than happy then to get in touch with new people. So.
Okay, so get in touch with my new trading warrior brother Vladi at Be Independent BB or www.beindependentbb.com, and we're mainly doing FX. Looks like he's everywhere, and really appreciate your time. Glad to know you, and may pips rain down on you and your community during this fall trading season.
Thank you very much, Dale. Thank you for having me.
All right, buddy. Good hunting. Okay, everyone, that's it for Turnaround Tuesday. We'll see everyone tomorrow for prior to the Fed and get you prepped for it. And remember, most of all, and this includes you too, Vladi, don't just count your pips, count your blessings. And I'll see everyone tomorrow. Adios, Warriors. Thanks again, Vladi.
Thank you.